Day trading in 2025 is completely different than just last year. So today I'm going to take you step by step from a beginner trader to an expert, starting off with top-down analysis, market structure, candlestick patterns, and everything you need to know to get started. And then we will end off with advanced techniques like supported and resistant supply and demand, order flow, and copy trading multiple prop firm accounts to make millions and millions of dollars. So let's get right into it. So first things first is you need to set up your TradingView. Now, TradingView is a website that we use to do all of our analysis, right? To look at the charts that we're going to trade. So when you first get onto TradingView, it's going to look a little bare, right? So let's delete all these indicators that we have, right? When you get on, it's going to look just like this. Now, the time frames you want to have up here, right? If you click this arrow, you can come and favorite the time frames that you want to have. So me right here, I have the 3 hour, the 5 minute, the 1 hour, the 4 hour, the daily, and the weekly, right? So you can just come start all of these and then we'll get into all that. Quick setup, get the right time frames that you need. Second thing is you want to have the pairs that you're going to trade. So these pairs right here are for futures trading. So let's go and make a new one so you guys can do the same thing. We'll call this Forex 1 because I already have a Forex 1. You're going to come up here to the plus sign. We're going to add these pairs in for Forex. You're going to come down. You're going to put Euro USD. And you want it to say FXCM or Awanda. Those are the two best ones. Try to stick to the same ones. If you pick FXCM, then stick with FXCM. So we're going to do that. Let's go down to AUD USD. Right, that one says Awanda, but try to put FXCM. What else? GBP JPY is another good one. And I would just stick with these three right here. These three right here is all you need, right? You don't want to have millions and millions of pairs. 3 to 4, maybe 5 is the max what you want, right? You can also add NAS 100. So these are indices, but we technically treat it like the same thing. So NAS 100, we're going to get FXCM. You can also add gold in there, which is XAU USD, right? Boom. So these are 5 pairs. I wouldn't have any more than 5. These right here are the best pairs that you can trade for Forex, right? So get these on your chart. Now we got to talk about the sessions that we want to trade. Now there's 3 main sessions, right? We got New York session, we got Tokyo session, and we got London session, right? So New York is always going to be the best. It has the most momentum, right? So we can catch those higher risk to reward trades. If you don't know what risk to reward is, it's basically how much you make compared to how much you risk. So let's say we have a 1 to 5 risk to reward. We're risking 1% to make 5%, right? That's a risk to reward. Now, if you have a high risk to reward, if you guys are looking for a broker to trade this strategy, then you're going to want to go with Henko Trade. That's the only broker that I trust. I've been using them for years. They have low spreads, fast withdrawals. They let you trade gold and NAS 100. They just got everything that you want in a broker. So if you guys want to use them, I have a link down below. Sign up and let's make this money. That's way easier to be profitable than if you have a low one. But we'll get into that in the future. So with sessions, right? You got to choose your session. New York is the best, so I recommend everyone to trade New York session. And to find out when New York session is for you, wherever you are in the world, you're going to come to indicators. You're going to type in kill zones and get the one by Oscar VS. So you just click this. This will pop up, and this is showing you all the sessions that there is, right? So we got New York session in gray. We got Asia or Tokyo session in red. And then we got London session in green. So once you have this up, come to settings. You're going to turn off every session that you're not going to trade. You only pick one. So I'm going to trade New York. So this is my session. After this bar opens up, I know I can look for a trade. So now that we have your TradingView set up, we got the best pairs. We got our sessions marked up. We got our time frames ready to go. Right now we got to get some tools. So these are the tools right here. If you come right here and hit the arrow, same thing as the time frame. You're just going to favorite the ones you want. So you can see what I have right here and favorite them. So we have the trend line, horizontal ray right there. So I'll go to the next one, fib retracement. I don't use that, so we can take that off. We want to put this long position, short position, right? These tools right here is to enter the trade. So if we're going to go for a long position, you would get that and say we want to enter right here on this candle, right? This red part is your stop loss. Wherever you move this, this is your stop loss. That determines how much you're going to risk. So if price comes down and hits this, we lost the trade, we were wrong, right? If it comes and hits this top part, the green part, which is TP, meaning take profit, that means we were right and we made money. Same thing for the short position, right? It's just the opposite direction. When we're looking for sells, we use this one. When we're looking for buys, we use that one. Simple enough. So now that we got our tools, right, you can put all of these that I have, right? Especially this rectangle is very important. We use this to mark up zones, right? So make sure you have that rectangle. Okay, so now that we have your trading view set up, now let's get into the actual charts and the patterns, right? So first thing I want to talk about is the candlesticks themselves. Okay, so let's break down the candle. So if you look at this candle right here, we see some lines coming out the top and the bottom, and then we see this filled in spot in the middle, right? So the filled in spot is called the body of the candle, right? And these lines or tails coming out the candles are called wicks. The wicks are showing us where the sellers took over and we rejected this area. So this candle body was all the way up here, right? It was all the way up here, filled the whole wick, and then the sellers pushed it down, right? So we rejected this area. Rejection meaning we couldn't pass it, right? We rejected it and turned around. So the body tried to come up here, and then the sellers were too strong. We pushed it down. Same thing from here. Sellers were pushing it all the way down, then the buyers pushed it back up, leaving a wick, right? So those are very important. If you see this candle, right, this body came all the way down. The sellers pushed it all the way down, but the buyers were stronger and pushed it all the way back up, right, leaving a rejection, leaving a wick behind. Now, these are very important. You want to see rejections in key levels to know when to enter a trade. That's pretty much all you got to know. Now, there's different types of candles. All right, so I want you guys to look at these two candles. So this red candle right here is called a doji candle. What does that mean? That means that there's long wicks to both sides and the body closes small like this right in the middle. That means doji, meaning it doesn't know which way it wants to go. It's indecision in the market, right? It doesn't know if it wants to go up or it doesn't want to go down, right? Usually you'll see a reversal at this candle. So you see how this candle, you see how price was dropping all the way down, melting, going down, sellers were winning. And then when we got to this candle, we had indecision, right? The sellers and the buyers were literally having a tug of war and ended up in the same spot. And then what happens? A reversal comes. So this candle is very important. It's called a doji. Write that down. You see this? It's a good sign. This one right here is called a bullish engulfing. Now, bullish just means buy, right? We're going up. And bearish means sell. We're going down, right? So since this candle is pushing up, it's called bullish. Engulfing means it engulfed the candles before, right? We engulfed this one. We engulfed this one. Right? It shows a very strong sign. If you see a doji and an engulfing candle, that's a great sign that price is about to go up like it did. So bullish engulfing, doji candle. Now this right here is one of my favorites. Now this one is called a hammer candle. As you can see, it kind of looks like a hammer, right? This would be the handle of it. This will be the top of it. This is the hammer where you hammer things, right? So this is called a hammer candle, longer wick to the bottom, small wick at the top, and then the body right there. That is a great sign too for a reversal, just like the doji. This one's a little stronger though, right? So you want to look out for these. So make sure you write that down. Doji, bullish engulfing candles, and hammer candles. These are the only three candles that matter. These three candles will make you so much money if you use them in the right area. Nothing else matters, right? Bearish engulfing, hammer candle, doji, right? Doji, hammer candle. Doji, hammer candle, right? And every time you see a doji, what happens next? It pushes up. See a hammer candle, what happens next? It reverses and pushes up. So these are great candles to know, right? Those are the three candles you really need to know about. And the same thing for opposite sides. This is a hammer candle, just the opposite direction, right? It's the same thing as this, just upside down, right? So it's great to see. Same thing with bearish engulfing. Same thing, just going down. That's all you need to know about candlesticks. Now let's get into market structure, right? This is very important. Now the market likes to move higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Why is this a higher high? Why is this a higher low? Very simple. This high is higher than this high, higher high. This low is higher than this low, higher low. Very simple. Don't complicate it. Same thing for the opposite side. Lower low, lower high, lower low, lower high, lower low, lower high. Why is this low considered a lower low? Because it's lower than this one. Why is this a lower high? Because it's lower than this high, right? It's very simple like that. Now, what happens if we're making this pattern of higher highs, higher lows, and then instead of making a higher low, we make a lower low, right? Now, this is what you call a breakup structure. And this is great. We're going to use this in every single trade. When you get a breakup structure, that lets you know that instead of making higher highs and higher lows, price now wants to make a lower low, then it's going to make a lower high, right? This is where we want to enter trades to catch the next lower low because it's about to change the trend, right? So that's a breakup structure. Very simple. Do not overcomplicate it. It's all you need to know about market structure, bro. And then we have consolidating markets where it's just going up and down, not really making higher highs or higher lows. This is consolidation right here. You see how we're just kind of ping-ponging, right? We do not want to trade these markets. We do not want to trade these markets. Wait for it to break out and then give us a better setup. I actually took this trade, in which I will break down later. Okay, so now we got your trading view set up. We talked about candlesticks. We talked about market structure. Now let's get into the sauce. So now we're going to talk about top-down analysis. This is very important and every trader should be using this. If they're not using this, then I highly doubt that they're profitable. So what is top-down analysis? Just like what it sounds like, we're going to start from the top down. So we have the weekly, the daily, H4, H1, 5 minute, 3 minute, right? We really don't need the 3 minutes. So let me take that out. So we're going to start off on the weekly. What are we going to say? We're going to say, what is this doing? Right? What is this doing? You don't got to look into every individual counter. You're going to zoom out and say, what's happening? Okay, the market is going up. That's all you got to do. The weekly is done. Okay, we're looking for buys. The weekly says we're looking for buys. We go to the daily. Take another trend line. What is this doing? Just zoom out. What are we doing? We're going up. So now it's 2 time frames, very strong time frames, telling us that we're going up. The higher the time frame, the stronger it is, right? So a weekly and daily is going to be 1,000,000 times stronger than a 5 minute. Right? So the higher it goes, the stronger it is. Same thing if we had a monthly zone, that monthly zone is stronger than the daily, right? So that's just how it works. So we look at the weekly, the daily, hey, we're going up. It's enough for us to say we should be looking for buys. That's 2 things. Then you're going to work your way to the 4 hour. We're going up. 1 hour. We're going up, right? Right here, we're going up. So that's all the time frames are telling us we should be looking for buys. So that already cancels out sells. Right, so now we're looking for buys, top-down analysis. The higher the time frame, the stronger it is, right? So if the weekly, daily, H4, and H1 are saying buys, and we go to the 5 minute, and the 5 minute says sells, what are we going to do? Disregard that 5 minute because all the higher time frames, which are much stronger, are telling us to look for buys, right? So that's how you find what direction you're going to be trading for the day. All the time frames are saying buys besides the 5 minute, right? We're going to listen to the higher time frame. So now that we have this, now what we do is start looking to trade. So we go to the 5 minute, right? You always want to enter on the 5, 15 minute right there, right? You want to enter on the lower time frames to get the high risk to reward. Okay, so now that we have the 5 minute, now we're going to talk about different strategies, right? So we're going to go over support and resistance. We're going to go over trend line breakouts. We're going to go over supply and demand, right? All right, first things first. What is support and resistance? So support and resistance is just the roof and floor, right? So price keeps bouncing off or turning around at a certain point, which we would call a ceiling or a floor. So if you see right here, price keeps turning around, we draw a box, right? We take our rectangle, draw a box. Price keeps bouncing off, right? So this is our ceiling. Now we got a floor, right? Every time we come here, we turn around and bounce off. This is our floor, this is our ceiling, right? We want to trade in between these. So if you just look right here, you see it right here on the chart. Ceiling, floor. What happens? We're bouncing off, ping-ponging in between. Literally, that's simple. Support and resistance. When we break through it, right, now support becomes resistance. So if price came down, came back up and tapped it, now it's resistance. Now it is our ceiling for us to take it down to the floor. So the support and resistance everywhere. You see it right there, see it right here, right? This is our levels to know how to trade, where to trade, right? Because we're going to always come ping pong in between these levels. So if you see right here, we broke through support, came back, used it as resistance, bounced off, went to the next support. So that's how it works. We break through, hit the next one, come back, right? We just bounce in between most of the time, and that helps us look for trades especially when you use these on the higher time frames, which we will get into at the end of the video. Now let's go over trend line breaks, right? So what is a trend line? It's basically just marking up the higher highs and higher lows, right? So let's say we're drawing up this trend line right here. Let me zoom in. Now you want to have at least 3 touches to make it a trend line. So if we start from here all the way down to here, right? We have 1 touch, 2 touch, 3 touch, 4 touch. Now you always want to have them at the tip of the trend lines, but if there's one going through, it's fine as long as it's touching it, right? So now we got a trend line right there. You can also do a trend line at the bottom. So we got 1 touch, 2 touch, 3 touch. It's a trend, right? Every time we touch this, we bounce, bounce, bounce. It's a trend right there, right? Now there's trend lines everywhere in the market. Trend line, right? Trend lines everywhere, trend line. Right? So these trend lines are very important to know where price is going to bounce off of. Once we break them, we usually mount. You see how we broke this trend line and we dropped, right? So trend lines are very, very strong. If you know how to use them, it can make you a lot of money. It's really that simple, right? Trading is not complicated. Make this even better right there. Look at this trend line, bounce, bounce, bounce. What happens when we break it? We mount. Starting to see how easy trading is, right? Trend line, we bounce, bounce, bounce. You see how I'm only getting the tips of the wicks? Come on now. It's looking good, looking good. All right, so that's trend line. Don't worry, we're going to put all this together and make a crazy strategy at the end of the video. So now that we went over trend lines and support and resistance, we got to cover supply and demand because we're going to put all this together to make a crazy strategy. Supply and demand is the bread and butter of the strategy. So what is supply and demand? Supply and demand is very simple, right? It's just very big pushes. 3 candles the same color showing momentum in the markets, letting us know a big player just entered the market. So 1, 2, 3, 3 candles, very strong candles, same color, no reds in between, is a demand push. That is a demand. Demand means we're going up. Same thing as bullish, same thing as longs. Demand is the same thing, right? Supply means we're looking for sales, meaning we're going down, meaning we're bearish. Supply zone, 1, 2, 3, 4, 5, 6 candles, the same color, showing momentum. So now that you know what it is, let's just mark up the demand zones. 1, 2, 3 candles, same color, showing momentum, demand. 1, 2, 3, demand. 1, 2, 3, 4, 5, red, all red, no green, supply, 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 demand, right? Very simple, don't overcomplicate it. That's literally supply and demand. Very simple. Now we got to go over the gaps in the market, or the FVGs, right? Now this changed my whole trading career and the way that I looked at trading. So there's gaps in the market that need to be filled, right? 100% of the time, not 99% of the time. So let's just go back to a random place and I'm going to show you. Let's look at this candle right here, right? So if you look at this candle and you look to the left and the right of it, you can tell there's no wicks, right? There's no wicks coming up here. And that is a mistake that the market needs to fix, right? We pushed too strong. We didn't have no corrections. So if we take a line, right, you're going to go to the candle that doesn't have the wicks. You're going to go to the candle before it. And then you're going to go to the top of the wick where that wick ended, draw a line, draw it across like this. Then you're going to skip the candle with the no wicks, go to the third candle, go to the bottom of the wick, draw a line, right? If these lines are not overlapping, then this is the gap in the market. This is literally the whole gap. And once you find a gap, you take a rectangle, you go to the first line you drew, which is the first candle before it, right? And then you're going to draw a box from there all the way down. Let me zoom out. In this case, it would be a very big zone, right? Because we want to put it under a red candle or like a candle like this where it's the low. So in this case, we would never use this, but for just purposes of teaching you, we're going to use it, right? We typically want our boxes to be very small like that. But that's the gap in the market and they always get filled. So if I forward it, you're going to see we get filled over here. It fills the gap, right? Now we want to see a reaction off this gap to where it pushes up. But we need to have all the other reasons or confluences to enter the trade. So that's one gap. Now let's go over some more gaps. We see this candle. There's no wicks to the left and the right. So what do? We take our line, draw it at the top of the candle before it. Skip this one, go to the third one, draw it at the bottom. Now we have a gap, right? These lines should be overlapping. We have a gap in the market. So what do? Get our rectangle, draw from the first line down to the swing low right there. Swing low is just the lowest point that price went before we had this demand push. So this is the lowest point it went before we got that push. This is a good box, right? Now this gap needs to be filled. We don't know when it's going to be filled. It could be filled immediately. It could be filled a month from now, right? We don't know when, but when it gets filled, you can start looking for a trade. If we drag this out, what happens when we come into the zone? We turn around and we go up. So this is the trades that we're going to be catching, as long as you have all the other confluences that we go over. And you can see on the candle right above it, we have a gap there too, right? Top of this wick, skip this candle, bottom of this wick. This is a gap that needs to be filled, which it was filled. You're probably thinking, which one should we take a trade off of, this one or this one? I will go over that when we get to the advanced section in just a second. So that's a gap in the market. Let's look for a sell gap, right? So if you zoom in right here, you can see this candle, right? It has wicks on the left or the right, but there's a spot where it's not overlapping. So if we get a line and draw it from the start of this one, right? So since it's a sell, we go to the candle before it, which is at the top, right? And we draw it at the bottom of the wick. We skip it, go to the third candle, draw it at the top of the wick, right? Now there's a little gap right here. So we take our rectangle, draw it right there to the swing high, right? It comes back, gets filled. So now that you know everything that you need to know, we're gonna get into some advanced techniques and a strategy that you can use to start making money today. I'm not giving you some BS strategy. I'm giving you a strategy that I use and my students use every day, just because you watched this far. Okay, and we're also going to get into some advanced techniques. So the first thing we're going to do is we're going to take support and resistance and supply and demand and top-down analysis, put it all together to make a very, very strong daily bias, right? So what are we going to do? We're going to go to the H1. And when we're in the H1, we're going to draw up support and resistance zones. So we see a support and resistance right here. Support and resistance right here, support and resistance right there, right? Let's just use these three zones. Now, this is called supported demand and resistance supply, meaning we want a support and resistance zone that has supply and demand pushes coming off of it. So if we look at this zone, is there supply pushes coming off this zone? We look right here, one supply, right? So this is a valid zone. So we're going to keep this zone. Now we go look at this zone. Do we have demand pushes coming off of here? Now we're going to look at this zone. Do we have demand or supply pushes coming off of here? Let's zoom out. Let's drag it more in the past. Okay, we have a supply push, right? Demand push. So this is a strong zone. Now let's go look at this one. Supply push. So these are all valid, right? These are all valid zones right here. Strong demand push. So this looks great. Now we're going to use these zones to trade off of. You can see we're ping-ponging in between. So what are we going to do? We're going to look to take trades off of these zones on the 5 minutes. So once we have that, we're going to go to our 5 minute. So after we tapped it, we got a demand push, right? We got a demand push. Not only that, we got a trend line break right here. 3 touches. So we got a trend line break. We're bouncing off a higher time frame supported demand and resistance supply, right? In this case, supported demand. We get a demand push on the 5 minute. If we zoom in, we can see that there's multiple gaps. We have a gap right here, and we have a gap right here. Now, this is the advanced part of the section. So we would never take a trade right here. Why? Because there's a gap and a demand push under it. So this we would delete. We're not taking that trade, right? We're taking the first gap every single time. And I don't care how many gaps are up here. We're taking the first one with the demand push, right? And look what happens as soon as we come and fill that gap. Now, the box will be drawn like this. I actually took this trade live. If you follow me on Instagram, you know I posted it right there. So what happens as soon as we tapped it, what happened? We got a doji and a bullish engulfing right after it. Now, advanced techniques. I like to enter on break of the candle. What does that mean? As soon as price came and tapped my box, most people would have entered right here with a very big stop loss, right? We don't do big stop losses. So what do? I enter on break of the candle. If you look at this push down, the supply push, notice that the wicks never passed each other. So when this candle opened up, it never passed this wick right here. Same thing, it never passed it. So when it does pass it, we enter, calling it break of the candle entry. This candle opened up, we broke the high of this candle, we enter. Stops below the candle wick right there, and we hold. And I caught this trade for a 1 to 6. This was a beautiful trade that I put on Instagram, right? So this is everything that we're looking for, but I'm not going to stop there. I told you, I'm going to give you the sauce. This is advanced stuff. Another confluence or reason you can look to enter the trade is you also want to look for order flow. If you don't know what that is, a basic breakdown is look to see if supply setups are winning or demand setups are winning. So before I took this trade, what happened? You can see this supply zone With the gap, everything that we wanted, right here, which would have been like that, it lost. We bounced off this higher time frame zone. This demand push came, and people that entered right here lost, right? So that means demand setups are winning right now. Supply zones are losing. So that's an extra confluence to enter the trade. That could literally just change the game for you. See who is losing and who is winning and be on the winning side. So let's do a quick summary, and then I'm going to teach you how to turn this into hundreds of thousands of dollars very fast. First things first, top-down analysis, starting from the weekly all the way down to the 5-minute. After you do that and you see, okay, buyers are in control, we should be looking for buys this week, then you're going to go and draw up supported demand, resistance supply zones. Once you get those drawn up, you're going to go to the 5-minute, wait for it to bounce off one of them zones and give us a setup. What is our setup? A demand or supply push that's breaking out of a trend line, that's breaking structure, that comes back to fill a gap, and we enter on break of the candle like you see here. We bounced off the higher time frame zone. We broke a trend line with a demand push. We came, we filled in the gap, entered on break of the candle, and we want to hit a 1 and 3 minimum, right? 2.5 the bare minimum, and that will make you profitable. Now let's talk about copy trading, prop firms, brokers. Which way should you go? What's the best bang for your buck? First things first, copy trading will make you so much money. And you're probably thinking, what is copy trading? Copy trading in a nutshell is you take one account, then you make your master account, and then you put 5, 10 accounts under it. So whatever you enter a trade on that first account, the master account, it'll automatically copy to the 5, 10 accounts that you have on the side. Now, this is where my life changed. So instead of me trading one account, I'm trading 20, 30 accounts, but I only have to focus on one account. Copy trading will change the game. Now, to copy trade, you need a prop firm. If you don't know what a prop firm is, it's basically companies that will fund you if you know how to trade. So they give you a test called an evaluation test, right? If you pass that and you make, let's say, $10,000, right? And you pass that, you show them that you know how to trade, they will fund you hundreds of thousands of dollars to trade with, and they just keep 10% of the profits. It's a good deal to me, right? What I want you guys to do, get a prop firm challenge, pass it, get some withdrawals, some payouts, invest that into more prop firm challenges. So now instead of 1, you have 10. Put that on a copy trader. You can use Tradeovate if you're trading futures. You can use social trader tools if you're trading Forex. Now, for the best prop firms that I recommend that I'm not affiliated with any prop firm. I'll put them in order. Number 1, Take Profit Trader. They got the best rules right now. Number 2, Top Step. I don't like their withdrawal rules, but they're number 2. Number 3, I would say Apex. They have horrible rules. I wouldn't even recommend trading them, but you can get 20 accounts for very cheap, like $30 each. So that's a good beginner one just to get used to trading prop firms. And you can make a lot of money with them, but the rules are ridiculous. I do not recommend them. I would say Take Profit Trader is your best bet, and I'm not affiliated. Now, when it comes to brokers, there's no one else that I would use besides Hanko Trade. I am an affiliate of them, but I've been with them for years. They're the only broker that I trust. Like, I'm not just saying that. They're the only ones that I trust with a large amount of money. So if you guys want to use Hanko Trade, I'll put the link down below, and you guys can sign up with them. Also, once again, if you guys want mentorship from me, I'll hold your hand, take you step by step to profitability. Hit the link down below, book a call with my team. If we're a good fit for each other, I'm going to get you right. 45 days or less, I'm going to get you profitable. It's guaranteed. If you don't get profitable in 45 days, I'm going to work with you one-on-one until you do. Now I want to talk about the most important thing, right? All this stuff is good, but if you don't have a winning trading plan, you're never going to be successful. You're never going to be profitable. So how do you create your trading plan? You want to use this strategy every day, and you want to journal your results. So you want to journal everything. I'm talking about the time you took the trade, what day you took the trade, what kind of candle hit your demand supply zone. Was it a rejection? Was it a doji? Was it bullish engulfing? You want to journal every single thing. Where supply and demand setups winning, where demand setups winning, everything possible you want to journal. Then after a month, you're going to look at your results and you're going to develop a trading plan. Now, if you join my mentorship, I already give you the trading plan, but this is how you create one from scratch. You look at what's working. Okay, Mondays, I usually win. Wednesdays, I usually lose. Let's cut out Wednesday. You write that on your trading plan. No trading Wednesday. I'm only going to take 1 to 2 trades a day, risking 0.5% or 1%. You can't go any higher than that. You're going to say, what are your favorite pairs? What is your favorite window of time to trade? Me, I like to trade after 6:45 to 9 a.m. Right? So you just got to journal everything and then you write down what works the best. And that's how you create a winning trading plan. And you got to stick to that no matter what. I don't care what's happening. I don't care if Jesus himself comes down and tells you to take a third trade when you only have 2 trades. You can't take that third trade. You need to have everything written down, a rule book that you're going to follow. I'm only taking 2 trades a day no matter what. I'm only trading this pair no matter what. I'm only trading at this time no matter what. If I lose, I'm going to do this no matter what. That's how you become profitable. That's the sauce. That's the secret over everything. Following a trading plan that you know works. Take all this knowledge because this is real sauce. Nobody's giving away this much sauce. And I hope you guys become profitable. Tag me on Instagram when you do. I'll see you guys in the next one. Peace.